Welcome back to Switzer. Backed by popular demand is our regular chartsman, Lance Lay. Last month he told us the local market had not played follow the leader with the US. Will this trend continue? Lance joins me in the studio to tell us more. How are you, mate? Happy New Year.
Thanks, Marty.
Great to see you.
It's great to see you.
How was your New Year's and Christmas period?
Very restful. Great to be back to Sydney.
Excellent, excellent. Now, Lance, you're obviously a favourite son of the show. Backed by popular demand is a term that is most commonly used.
That's
so
great.
a lot of the viewers would know who you are and what you do. But for a bit of a refresh for 2014, you look at markets from what they call the technical or a technical perspective. What does this involve?
Right. Well, it takes into account price action, Marty. And in terms of price action, the thought is that the price in itself takes into account all the available information. So all the available information will result in four things: a buy, a sell, a hold, or a do nothing.
A buy, a sell, a hold,
or a do nothing.
Or do nothing.
And so when you have that type of situation and you've got emotions in the market in terms of fear or greed, market participants will do certain things, and that'll create movements and bumps in the chart. And these bumps reflect human psychology, and they're actually consistent across whether it be an index or an actual share.
Yep.
And so with that knowledge, you can then forward predict what might happen.
Yeah. So your investment time frame is a lot longer, a lot shorter, I should say, than other investors. You know, so you would consider the long term to be, say, 90 days.
Correct. We'll see. Typically, for example, for the preparation of this show, you know, over the past 4 years, I try to look forward to what the index would be, or the share I might be looking at the next time I'm coming onto the show, or the time after. So between 30, 60 and 90 days is when I'll determine whether a call that was made was right or wrong.
And we're going to make some calls today over the next 90 days as well. So we've actually got a clip now. One of the things you do is actually play a clip. So this clip was when you were last on the Switzer show, so we'll play that now. So we'll play the clip and you can talk us through what you said, Lance.
Sure.
I think over the next week or so, we're looking at a buying opportunity before it turns around, or do you think we could be in a more negative phase of the market?
Well, look, Peter, I hate to preempt some of this stuff because the negative momentum is currently still with us, all right? Yeah. Now, I could see it going down about 2.7%, which is about the 5,013 mark, which is that first S that's under the 200-day moving average.
Okay, mate, so talk us through what you said and what happened.
Well, basically, I came onto the show at the time on the 9th of December. The market was actually in a period of decline already. It was just above the 200-day moving average. I thought that it would more or less go down about 2.5%. And in fact, it went down 2.3%, so I nearly got there, and it's rallied really hard off those
And as
lows.
a trader, you could have possibly, taken profit on those numbers.
Absolutely. That's why.
So the 200-day moving average, that's an interesting point of discussion. I think a lot of people might not know what that means. Very quickly before we go in and look at your charts, and we are going to look at 4 charts this evening and get your view on what you're seeing and what you think is going to be happening. Just talk us through the 200-day moving average.
So the 200-day moving average is one of those indicators that we look at because consistently it has been a very reliable indicator. What it does is it takes 200 days of a particular index or a particular stock, they add them together, divide it by 200 and plot a line. So it's a trailing number, and it smooths the otherwise jagged movements we would see on the charts. Okay,
so we've now got your first chart, which we're going to get up.
Sure.
So the first chart is the ASX 200. So what are you seeing in this chart, Lance?
Okay, so there you can see on the far left, on the 16th of November 2012, you can see that it's gone up to a peak of 26% run until the 28th of October 2013. So roughly in a year, it went up 26%. At the moment, it's 5,322. it's gone up still 22.8% in 14 months. Now, as you can see on the far right, it's spiked up from those lows. The October line where I've got the S, where it nearly got to, it's spiked up and it's curling back down. The curling back down represents that, again, I think that high that we just saw is going to come off, is going to go back to the S line that you can see, which is the 200-day moving average, which is that sweeping yellow line from the bottom. And I think it'll basically, we'll see a retracement. We should be seeing a retracement in the coming weeks.
So in terms of, I guess, taking a long-term view, and as we said before, your idea of the long-term is 90 days, which for a lot of investors is not even the short term.
Right.
What do you see happening on the ASX 200?
Well,
are we going up or are we going down?
I think we need to consolidate. Having gone up 26%, and now sitting at basically 23%, you know, in the medium term, it still needs to go sideways. And going sideways means it needs to come off.
Sure.
It needs to come off to those S levels that I've identified. Firstly, back to the 200-day moving average. Then under that, where I've got the October level, and that's 5013 again. And then under that again is a longer S. Once it reaches those first two levels, I'd be looking at perhaps the lower one, but we've got to get to the first ones first.
So you're calling a correction in the next 3 months, or a small correction?
Yeah, I think a small correction. We need to, I would call it a consolidation.
Consolidation, fantastic. Now, we've got our next chart up, which is the Shanghai Composite. What are you seeing in this chart, mate?
Well, the Shanghai Composite actually today had some bad news.
On the back of the PMI services number?
Yeah, so
the market got sold off a couple of percent almost?
Yes, so the market sold off. You can see on the far right-hand side, the big dip. Well, that was done today,
sure.
Marty.
Yep.
And where you can see that I've got S and two lines. That's support at those levels.
Yep.
Now, that's not too far away. And what I said last time when I came on the show was that I was actually looking for this index to go to G1. I was looking for this index to improve because I thought that the conditions globally were improving. I think where we've got what happened to...
So G1's about 13% from where
that's right.
we are today, right? Roughly, thereabout.
Yep, and really at the moment, G1 is at risk of not materialising. We need to see where this pulls back to. If it pulls back to the S levels, that's okay. They're only about 1% and 3% lower.
Yep.
But where I've got the B is obviously, you know, this was a bad level, and I've spoken of this level before.
B stands for bad?
B stands for bad, mate. We keep it simple.
Good
here.
acronym.
And so what happens is if it breaks through bad, then, you know, I've got to reassess a lot of things, Marty.
Sure. Okay. So Shanghai Composite Index, next 90 days, are you seeing it up, down or sideways?
You know, I think I'm still positive China. I'm optimistic that we will see this through. And in that regard, I'd be looking for it to go near the B, hopefully not break the B, and so bounce back up. Sideways is the answer, mate.
Okay, rightio. Thank you. So the next chart we've got is the gold price. So gold's obviously had a tough time over the last 12 months, you know, contractions of sort of, you know, close to, or if not more than 30%.
Yep. Well,
what are you seeing with gold right now? Have we found a bottom?
Look, you know, I think I've called this chart finding a bottom. I think it's still finding...
Good name.
Yep. It's still finding a bottom, and I think it's virtually done that now. What happened last time when I came on the show was that it was already on the far right. It's basically gone near to nowhere. And what's happened is on the left-hand corner, you can see it really falling down. Actually, I've just noticed this is actually the chart from before. Fortunately, it hasn't made much difference because it's gone not very far from last time. You would see, if it was the actual chart, you'd see a little bit of an uptick.
Yep.
And really what we're seeing there in the gold price is a steep fall off, and now a bottom that we look like we've found, and there's slight uptick. I think it's a good time to buy gold.
And so next 90 days, you're seeing it moving up, and can you give us, I guess, a range?
Yeah, look.
What sort of percent you'd think?
Yeah, look, where the yellow line that sweeps down is the 200-day moving average.
Yep.
If this was the actual chart that I had, then what would happen there is you would have a T. I had a T level here, which is 1,300.
Sure.
I think it'll go to 1,300, which is about 4.8% higher.
Okay, close to 5%. So, thank you very much. Next chart, we have got the S&P 500. And what are you seeing here, mate? Are you seeing, is the S&P 500 going to follow the leader as it did last month when you were last on the show, or as you believe that it did?
Well,
the leader being the ASX 200.
Right. Well, looking at that, I might just start off by saying, look, the chart starts off on the 16th of November. It goes up and it actually peaks on the 31st of December, having done 37.7% in 13 months. And, I mean, by any standard, that is a huge run, right?
Sure, absolutely.
And so where we are on the far right, we're now at 1831. And as you can see there, it broke through the M line. The M line was a projection that I made back in March of 1744. It broke through there. I think it needs to return to 1744. I've got an S, which is a support level that's just above that.
Okay.
Yeah.
So, to summarise, you're saying that you think gold up, ASX 200, S&P 500
down.
Slightly off.
Yes.
And the Shanghai Composite
sideways. Yep.
And
down and sideways, hopefully.
Fantastic. Well, mate, thank you very much. Great to have you on the show tonight, and look forward to discussing with you in the very near future.
Thanks, Marty. My pleasure.
Fantastic. That's all we have time for tonight. If you want more, check out our website, switzer.com.au. If you want to get our thoughts on super, visit switzersuperreport.com.au. And if you've got any questions for me or ones you'd like me to put to an expert, email me, switzer@skynews.com.au, or follow me on Twitter, and the handle is @Marty Switzer. I'm Marty Switzer. Thanks for watching.